What's up, guys? I am going to speak in this video. First of all, I'm going all in on this YouTube thing. I'm going to really try my best. Something to look forward to, something to work towards too while I'm still perfecting my craft as a trader. And just going to put this info out. As things pop up, as I feel inspired, I'll do my best to really talk about it. So I want to talk about things that a beginner trader shouldn't do if you're like primarily in your first year of trading, and some of the things that I learned after being in the market for more than 2 years that I shouldn't be doing when I was I shouldn't have been doing when I was first getting into the stock market. And the first thing would be, off the top of my head, would be to not trade market open. And I'm not saying that you shouldn't trade market open, because there's people that their strategy is based off market open. But when you're a beginner trader, you really shouldn't trade market open, right? Because there's so much volatility, there's so much greediness because the market's open. People want to make their money quick, and so there's so many wicks going up and down so quickly, so much volatility, that if you don't know exactly what your strategy is, like, the losses could be very, very big. And the thing is, like, you can get lucky and like make a really big win, but that's not a scalable strategy. And so I recommend that you don't do this in the beginning, only after being in the market for so much that you know what your strategy is. And maybe you do find a strategy behind trading market open, because plenty of people do that, right? I'm not saying that you shouldn't. I personally don't trade market open. I like to wait for the chart to kind of form for at least bare minimum 15 minutes, and I prefer it to form for the first 30 minutes of market open to see where I can gauge a good entry, whether it's a short or a long position for me. And I can, from that point on, letting things, all the craziness from market open to kind of happen, I can kind of gauge better market direction, market sentiment, and overall market structure. And I can kind of, the odds are more in my favor of where I see the market going that day, and then placing a trade based on that. Another thing that I would say that beginner traders shouldn't do is going all in when you do find a position that you want to enter, whether long or short. If you have $1,000 in your account per se, you don't really want to go $1,000 in at the click of a button, right? You want to maybe size into something $30, and then size in another $80 on average, and that all depends what stock you're trading, the price of the stock, and how many shares you're trading of that stock. But you don't really want to go full leverage all the way, because if the market goes against you, then you're gonna be so emotionally wrecked, because like your $1,000 is gonna go to like $800, or whatever it is, and there's no point in really going through that emotional instability. And the thing is, like, I can say this, but like it's gonna happen to you, and it still happens to me, and I just better control it now. But that's really how you learn, doing things like that, going all in at once, and then you're like, oh crap, I just lost $200, $300, $400, whatever that number is for you, right? Risk tolerance is different for everybody. So just once you do find a strategy for yourself, just sizing into that strategy, because if it goes in your favor, then you can just continue to size in, and if it doesn't, then you can just get out for a small loss rather than getting out for a big loss because you leveraged at the click of a button. Another thing that I would say, and this isn't just for beginner traders, this is for the whole career, right? The entire marathon of day trading, your entire career as a day trader. Don't trade, period, if you're going through something mentally. Because it's hard to understand, but like, things going on outside of your life are going to transcend into your trading. So like, if you got into a fight with a friend or with a spouse, or got into an argument with somebody at work, and say you even squashed it, Subconsciously, it's still gonna affect your trading. It's like subconsciously in the back of your head, and you're emotional. And I know that it has nothing to do with trading, but I promise you, it's gonna be on the charts, and you're gonna trade emotionally, and then you could get lucky, right? But lucky is not scalable, and you're more likely to lose money, and you're gonna be like, oh, why did I lose money? Like, this is my strategy. This is how I trade, and it was something outside of work. So that's another thing. That's a whole another topic that I could talk about, and that's the psychology of trading, being in the right state of mind mentally before you go on the charts. Make sure everything in your life is just squashed, everything's handled, no issues before you actually get on the charts. Another thing that beginner traders shouldn't do is don't trade money that you're not willing to lose, because right, if you're trading like your rent money, your mortgage money, your bill money, your car payment, whatever that is, and you lose that money, like, you're gonna be like psyched. You're gonna be like, oh crap, I just lost my car payment, my car note. Right, when you start attaching money to actual life expenses, it messes you up mentally. And so the next trading day, you're gonna be like, oh, I gotta make that money that I just lost on my car note. You know what I'm saying? And then you're gonna double down or something, right? You're gonna emotionally trade, right? This is what I was just saying. Make sure everything in your life is like squashed and handled, and then you're gonna lose more money, and then you're just gonna get into a much deeper hole, and it's just a slippery slope from there. And so I just don't recommend you trading with anything you're not already willing to lose. And then that being said, I would just say, don't worry about the money. I know we get into this for the money, but don't trade to like make the big bucks. Just focus on your strategy, and once you get into positions, like analyze how you are emotionally. Like, if you get into a position, whatever that certain dollar amount is, like, how are you feeling? Are you feeling antsy? Are you feeling nervous? Like, right, if you're feeling nervous, then that's a cue that you're over leveraged. And so you have to really study your emotions as a trader, and that just comes with time. And trust me, it gets a lot easier. But yes, just trading an amount that you are willing to lose, so that when you do lose it, because trust me, you're gonna lose it in the beginning, you're not emotionally wrecked, and you can get back on the charts. Maybe take a break, and then you can get back on the charts whenever that is, and then you can move forward. Anyways, guys, my 2 cents, things that a beginner trader shouldn't do. And the thing is, like, you're gonna do them anyways. I did them all. I still do some of those things because we're humans, we're emotional, and at the end of the day, that's what makes the stock market move up and down. Emotions, right? Scared money, hopeful money, and so you really just got to get the psychology down. That's a whole nother video. I'm gonna make a video on that. I've already mentioned that twice, and it's a marathon, not a sprint. It was definitely a sprint for me in the beginning. I was like, money, get the money, and that's just not the right way to treat the markets. Respect the markets, because they will humble you. I'm gonna leave it at that, guys. Make sure you like, make sure you subscribe, all that YouTube stuff. And man, let me be consistent on this, man. I love y'all. Peace.